Hey everyone, Christian Castro here with Century 21 WIMCO. We're here again with Katie O'Brien at Element Funding. It's going to go a little more in depth today for mortgages, specifically debt to income ratio. If you want to touch brief over that.
Yeah, absolutely. So debt to income ratio, we wanted to go over some touch points on it, how it's calculated and the different loan programs and the requirements for debt to income ratio. So debt to income ratio is essentially what it sounds like, your debt to your income. Now, it's not your balances that are on each trade line on your credit report. It's actually the minimum monthly payments. So if you have a Capital One card and you have a car loan, it's going to be those minimum monthly payments and your newly proposed monthly mortgage payment all added up and then divided by your gross monthly income. And gross is obviously before taxes and insurance and other deductions are taken out. Mm-hmm. So that's how debt to income ratio is calculated.
Now, what are the specific debt to income ratio requirements for each mortgage?
So obviously different loan programs have different requirements for debt to income ratio. So an FHA loan is one of the most lenient, which we talked about last time, was a great program for first-time home buyers because it has the highest debt to income ratio maximum. So that is going to be 56%. It is a little lenient though, and sometimes can go into 57 or 58%. As far as a USDA loan goes, it is actually the most stringent on what the debt to income ratio maximum is. That is capped at 41% back ratio. And then conventional goes to 50%. And then a VA is really kind of dependent on the lender. A lot of lenders actually cap it at 43% debt to income ratio. We don't have a cap. So there's a form that's part of a VA loan application, and it's called a residual income requirement is on there. And so depending on the size of your family, as long as you have residual income left over in your paycheck after all of those credit report monthly payments, your newly proposed mortgage payment, your federal taxes, and your Social Security, if you've got money left over in it, we'll close the loan for you. So I've actually closed VA loans with like a 65% back ratio.
Wow, that's awesome.
Yeah, it's one of my favorite programs. It's really great for especially, younger military that are moving to the area. We've closed them with 20-year-olds and 21-year-olds. And they get to have this awesome investment in their pocket. And if they don't stay here, they either rent it out or they sell it and, get to collect the net proceeds. So it's a great program, and it's wonderful to not have to have a cap for every VA loan.
Absolutely. I'm going to be putting Katie's social media somewhere around here. If you could please follow her for helping us be all more educated in the loan process. Please follow her for keeping us so more educated. I just completely butchered that, so I'll cut that out and fix it.
How do you want to close this?
Did you hear that? Yeah, no, I was just
I know, it's pretty good. You could have kept rolling.
But then I mumbled still at the very end. So we're gonna restart this again. I'm gonna put it's gonna be messed up.
I don't care. Most of it was really, really good.
Yeah.
So
we're gonna have to redo that ending where I'm gonna figure out the ending. It's okay, we can let it keep rolling and I'll just
edit it out.
Yeah, I'm gonna edit it. Because I started off good and then I just mumbled through and I felt my tongue roll.
So just say start back with that's great information, thanks.
Yeah, what was my last word? I said that's damn, I forgot what I said.
I think you said that's really good information.
It's really good information. Okay.
And just roll from there.
Okay. That's really good information, Katie. Thank you so much.